Hello, welcome to Major Investor. If you don't know me, this is your host, Will Major, and I've got to do some prepping first, so let's get started. Okay, so morning, everyone. This is January 6th, 2022, and Happy New Year to everybody that I haven't said Happy New Year to, uh, and Happy Holidays. Hope you enjoyed yourselves, um, um, and that we're still here on planet Earth, and that we're all doing great. Um, so today's broadcasting uh, is coming live um, from Major Residency. So this is my home office. Um, what's my message for today? My message for today, if you don't know already, if you haven't been paying attention, I would suggest you go back and review my follow broadcasting. Um, well, I'm about real estate investing. So if you were into buying houses and um, you want to take part into building your house, building your uh, you know, take part in building your houses, or you want to renovate the house that you just purchased for rental property, that's great. I got no problem with that. I'm just asking you why. Why did you do that? Because the reason why I'm asking is because I used to do that. Like I rented out my basement. We had Airbnb, and I thought that was great and all. That you could make a lot of money, uh, or I shouldn't say a lot of money. You make a few bucks renting out your place and your space, but you're taking a lot of trust on people, um, and these people can trash your place just like that, and then you're out. You know the amount of money you're getting is like $65 a night, right? $50 to $65 a night. And I'm in Calgary, Alberta, Canada. So if I rented out my place, I'm taking on the responsibility of making sure that everything is okay and that my house is part of their property now when they rent it. Um, I have a great wife who looks after the rooms and stuff like that, so it was great. Uh, but I was like, if they trashed anything in that room, it's like a hotel. If they trash it, they have $250 security deposit. The $250 security deposit, they trash it, it's going to cost $500 or $600 to fix it, and that's if I do it. If I have to hire a crew to do it, it's going to cost me thousands. So why would I rent out my place knowing that I'm going to be stuck with a big, huge bill that I have to come up with? It's just not worth it. So uh, when I'm looking at buying a house, I've had friends that rented out their houses and they did very well. I mean, they rented them out for years, 5 or 6 years. So, but last go around, they had two tenants. One of them trashed the place really bad, and they had to call in a hazmat team to come in and fix it. Uh, it was a surcharge of $15,000 to them. Okay, because they had to call in a hazmat team. They do all the work, the renovations themselves. Um, but you think about this, right? Like, okay, so they went and did it themselves for a while. They didn't like it, so they went with a regional manager. Somebody comes in and does the rental and the tenant act for them, but they charge them 10% of whatever their commission is on the rental property. So 10% doesn't seem like a lot, but if you're renting your place up for $3,000, that's $300 out of your pocket every month. So that's one thing. Then you got to put the $15,000 that someone trashed it, and then the next tenant that comes in, they trash it, costing even more money. So, like, that's why I'm like, why would you get involved in real estate investing when you're going to have headaches? Uh, one, collections. Two, doing the work yourself. Because if you hire it out, it's going to cost you 3 times more than what it would cost you to do it. So if you think about it, even if you have to do it again, it's still cheaper. If you have to do it 3 times, then you're at the exact same price that it would be to contract it out. So those are the things that you want to correspond or link together when you're uh, investing um, in real estate investing. So why am I on talking about real estate? Because there's an easier way, a lot easier way to invest your money. So without further ado, there's real estate stocks out there for you. And is it risky? Yes, it is. Um, but if you look after if you look after your foundational money, you're going to be okay. And how do you do that? Well, it's called a stop limit. So your first time buying a stock, you should always put a stop limit in before buying the stock. So you have a plan. The plan is to take what you've learned and put it to good use. And the only way to do that in this marketplace is to put a stop limit in. So when you go through your brokerage accounts, so if you don't have a brokerage account, what's a brokerage account? A brokerage account is a institution that allows you to trade in the stock market. Before you had to go get a broker. Before the internet, before everything, you had to go get a broker because they were the only ones that could do anything on the stock exchange. Now you can do it from the comfort of your own home. So you can start making money yourself, for yourself. And how can you do that? Um, Start investing in you. It's that simple. So, but have to consider, in order to buy real estate, how much money do you have to come up with? That's what I'm talking about. You have to do the exact same thing, the exact same thing. So when you're investing into a stock, let's say, um, let's just pick one. We'll pick Oxford because I know Oxford. Okay, you don't have to pick, do any real estate out there. It doesn't matter. Okay, and this is, I'm going to start with a disclaimer now because if I say Oxford, do I mean that you should go out and buy Oxford? No. You have to do your own due diligence. So I can't tell you when to buy, what to buy, where to buy, but I can point out certain things, certain aspects, and I know Oxford. So in Oxford trades on the Nasdaq, OX SQ. Okay. Um, just make sure that that is correct. Just give me a second. Hold with me. Pardon me. 2 seconds. OXSQ. That is correct. Okay. So they pay 42 cents per share per dividend, and it's monthly income. Um, yeah. So it's yeah. So it's a monthly income. So it's a monthly income. All right. I don't know why there's a delay. I'm trying to figure out this delay problem with YouTube. Yeah, still trying to figure that one out. Looking at Oxford. So we'll go back to Oxford. 42 cents per share per year. So what does that mean? That means 3.5 cents a month in dividends that they pay you, and it's US. It's on the Nasdaq. So what is it going to give you? Okay, so if you go on the platform, I'll show you. Go on a little trip. No, it's backwards, right? So that's what we're looking at. We're looking at Oxford, $4.18 currently. The dividend is 42 cents a year. The yield is 10%, which is awesome. Earnings per share is $1.60. PE ratio is 2.6387. So I know that everything's backwards. You really can't read it. And whoa, we're losing control. We're out of control. All right. Okay. So we're talking about real estate investing. So why is real estate investing almost the same as buying real estate? Okay, so if you were to take what you're to put down on a house, not borrowing it, just taking what you're going to take and borrow and put down on a house. Okay, so you need 20%. If the house was $180,000, how much money would you need? $36,000. You took that $36,000 and stuck it into Oxford, and you divide that by 36,000 divided by $4.20, $4.22, $4.25. Your average buy-in is about $4.15 because you don't want to go at market. You want to go below market, a few cents below market, and there's a reason for that. You never want to buy at market unless you have no choice but to get in right now. But the thing is with this, I'll show you. Okay, you were just looking at it, but it was backwards to you. If you were to look at your entry points, the 13th of this month is your entry point. Okay, and the reason why that is because it's that's the expiration date of the dividend. So you have to be in before the 13th or the 13th, and then they have a calculation. So and then the pay table for the same month is going to be the 31st of this month. So it's pretty fast, right? The calculation is pretty fast. So the 13th, your money has to be in there. And then they calculate your dividend yield. And then they give you your dividend at the end of the month. So they give you that 3.5 cents per share. Now you can do a drip. Now, a drip means that they're going to reinvest the money back into the stock. So rather than starting collecting the dividend yourself, and you pay no taxes when you do the drip, So when you do the drip, it can go on your platform and it'll show you how to do the drip. Okay, and when you go through all those steps um, on how to do drip, which is really fast and really simple, it's got to be on the list that the brokerage accounts allow you to do it. Now this is through Qtrade. Um, Quest, Quest? It's through Qtrade. Okay, my platform is through Qtrade Investor. Um, that being said, um, they're able to give you a certain role in your stake. Now, I'm not invested in Oxford currently. I will be shortly, but not currently. I'm looking at a few other great investment tools we'll be using later. Um, but this is a great stock to get into because of the dividend yield. They're offering you 10%. There's not a lot of companies out there that are this cheap, offering you a good dividend yield of 10% plus. So uh, I've came on before and talked about BTB. BTB offers you 32 cents a share per year, which is 10 cents cheaper than Oxford. And BTB is Canadian. So if you are Canadian like myself and you're looking at investing, BTB is probably a better option because of the currency rate. You have to buy the stock when it's best for you. And how is that? How is it best for you? It's best for you in two things. Okay, so the two things are um, when you buy it, knowing when you buy it, and when you sell it. Okay, so you don't want to sell anything in these stocks because you want to accumulate, right? You want to put the money back into the same stock, same stock, same stock. So, for instance, I got 1,500 shares of BTB, and then I got what they call a drip. So I went on, talked to my financial broker, and find out where I could put the drip in. Then once I set it up, instead of taking the dividend, I reinvest the dividend back into the shares. Understand? So now I got 1,509 shares. And then next month I'm going to have 1,518 shares. 1,500 goes up 9 until it gets to a certain point where I even make even more money. So then I get bigger dividends. So it'll be 10 dividends. And then eventually it'll be 12 and 14. You get the idea, right? So then I'm accumulating more and more dividends as I'm holding the investment. Now, why BTB and why Oxford? Oxford is a great stock. Instead of them having real estate, they borrow money, they lend money to people who are investing in real estate. So you understand what I'm saying? So even though it's not a particular investment tool for investing into real estate, it is part of real estate, a big part of real estate, because they're lending to people who want to build condominiums, who want to build uh, warehouses for shipping. So that's huge, right, in itself, because they're the ones lending the money to real estate investing. Okay, so Oxford's a good company. BTB is an actual real estate holding company. Okay, so the difference between the two of them is very similar, right? One lends it, the other one is the one investing in it. Um, so BTB is 2 seconds. Okay, there's so many B2B real estate investments, and the one is $107. That is not the one. They offer great dividend too, and they're part of the same branch. But the one I want you, the one I'm invested in, is BTB Real Estate Investments Trust, BTB.UN on the TSX. Okay, so right now it's currently trading at $4.07. My buy-in, just so you know, was $4.10, just for disclosure purposes. What does that mean? Doesn't mean a lot, right? It just means my stop loss is at $4.89. So my stop limit, because I'm just new to this company. So when you purchase it, you put your stop loss in, put your stop limit. So when you put your stop limit, it protects your assets. Okay, and you only do that for the first little bit, and then once it goes up, you put your stop limits in higher. So once it hits $4.70, my stop limit becomes $4.30. Make sense? Or $4.50. It goes to $5, my stop limit would change again to $4.80. Give me 20 cents on the dollar. I'm still making money, yes. And what's my stop? What's my limit? My investment limit? That's my investment limit. I can't take any less than that, right? So that's why you keep changing your stop limits. You don't keep the same stop limits. It goes to 6. Your stop limit becomes 550. Goes to 7, 650, 8, 750, 9, 850, 10. You get the point, right? 950 will become your stop limit. And then your drip keeps on happening month over month over month over month. And why BTB? Well, BTB is a growth stock. Okay. They just purchased 4 properties, and it cost them $95 million. Out of that, they're going to give you, they're only making 32 cents. They're giving you 30 cents on the dollar. So they're only 2 cents that they're keeping for margin. But here's the catch. They only had $946 million in assets last year, and they purchased $95 million. And those asset classifications are fully leased already. So they're already making money on their money. Even with the Omicron, businesses still have to pay their rent. So it doesn't matter about the variant or anything. So the psychology part of it is people want to pull back. But the truth of the matter is, this is when you want to look at purchasing it. Makes sense? Everybody wants to get out of it. You should be looking at purchasing it. Reason why is you get the dividend, you get the dividend yield, you get the exposure to the stock markets, and you get to start making money today. Okay? And these are monthly paying stocks. Oxford and BTB are monthly paying. And they're the best in their yield, meaning they're the most that you're going to make on your money. Now you can do your research on, and I suggest you do your research on all the real estate stocks that are out there. Make your determination. If you're paying $22, you can't buy that many shares on $36,000. I'm sorry, it just doesn't work that way. If you're at $50,000, $50,000 does buy you a fair amount. And are they the best in their field? For real estate investment, yes. For other investment purposes with bigger dividends, no. The best out there, biggest bang for your buck is Suro Capital Incorporated. They're trading at $12.33 as of yesterday afternoon. And they're offering you $8 per year dividend. That's life-changing money to anybody. $8, that's $2 per quarter. Now they don't do monthly. You have to put your money in there. You have to, like I say, put it into the drip. Leave it, forget it. No, you never leave anything you buy initially. You still have to put your stop limits in before you buy it. So when you buy it, it's that $12.40, and you're purchasing it. Your stop limit should be around 1180, 1190, somewhere around there. Okay, that's your stop limit. If it exceeds that, you're out. You're okay though, because February 14th is your deadline. February 16th is actually the deadline, but you want to have the money in there before then. And this is what I'm trying to tell people. This is what you want to do. Okay, this is where you want to start setting your goals um, up. They pay $2 per share. So that means if you had 10,000 shares, 10,000 shares at $12.33 or $3.40, you would have to have $124,000 sitting in your account willing to buy it right now. That is going to give you $20,000 return on your money. 20,000. Then you divide that by 3 months. That gives you your investment strategy. Okay? That gives you your $6,200 that you reinvest it back into the stock. Now, there's a reason why you do this. If this is your first time buying into it, okay, this is your first time. So you go with a drip. You put the whole thing back in. This gives you 11,000 shares. Not 10,000 shares, 11,000 shares. Okay? The next time gives you almost 13,000 shares. And this is 6 months. After 9 months, now you can start collecting. Okay? Because now you can do it month over month. And then you don't care. Or you could offset. Now, offsetting means selling it after they pay you, buying Oxford because it's in US. So you want to buy Oxford. Oxford gives you your dividend every month, 3.5 cents. So not bad. You're still like, okay, your $120,000 is now making you 3.5 cents, and you have an enormous amount of power because now you have 50,000 share, 20,000 shares of Oxford at $4.50, and they're giving you 3.5 cents per month. So you put your stop limit in again. You make your money every month, next 2 months, and then you sell it. Get into Suro Capital again, collect the dividend, get out, go back into Oxford, and then do it again. And you do the drip? No, you don't do the drip. You just collect the money. You have to pay taxes on that dividend, yes. Okay. There's tax benefits in the states that they have. It's RAFI. Um, and what that does is it gives you a tax shelter over your dividend. But the dividend itself from the corporation have to pay taxes. They withhold that to pay you. If you go with the drip, you keep it all. You just reinvest it back into the company. They don't charge nothing for that. Okay, because you're reinvesting it back into their company. So you get stock valuation. So you get a higher stock valuation because you get more shares. More shares means you get more money every quarter. So this is awesome. Oxford does the exact same thing. You reinvest it? No, you can't because now you're going to be offsetting it. When you offset stuff, you don't want to keep that money because then you have to sell partial shares. And some places don't allow you to sell partial shares, right? It has to be a certain value before you start selling partial shares. Like anything over $10 or $15, they'll allow you to sell partial shares. But I'm not recommending that to people, right? If you can't buy 1,000 shares or 500 lots, 500 bid lots, you should be buying. If you're reinvesting it, that's fine because at 10, 15, 20 over time, that will accumulate. If you're just starting off in the market, you're a 20-year-old or 18-year-old, this is the perfect time to buy this. You got a job, you start putting money away. Even if it's $10 or $20, whatever you're going to buy for that day, like a McDonald's sandwich or go get um, a latte or a coffee that you're doing every day, think about it. If I had $1.50 extra and I put it towards my investments, after time, it will accumulate. And then I get a monthly income from it. Isn't that awesome? That's what you could start building your account. Now, how long would it take? Well, if you do $1 a day, it's not going to take very long because it's after 30 days, it's $30. So after 2 months, you've actually got $60 in your pocket. So, and you're just young yet, so you need you'd want $2,500 but it'll take time. Okay, get a better paying job. Better paying job means you put more money away. So instead of $1, you're doing $2, $3 a day. You get the point, right? So the more you can accumulate, the better your offer. And once you set this up, once it's 10% on your money, if you do this for 10 years and you accumulate it, you could be a multimillionaire. Now, multimillionaire, I mean millionaire. Sorry, not multi. You'll have 1.2 or $1.1 million in your account after 10 years of reinvesting, because you're just putting the money back in, and then they're not paying you. You're just collecting the dividend, and it's going right back into the same stock over and over and over and over and over and over and over. Um, Make sure you put your stop limits in so that you're protecting your assets. It doesn't matter, like you don't want to sell the same TV that you just bought for the same price you just bought it. You want to sell it for more than what you just bought it. So the only way to do that is to offset. So uh, you're able to buy in bulk. You buy 20 TVs. You paid $114 for them. You'd sell them for. You try and sell retail, $300, right? Can't. Okay, it'll drop down to 280, but you can go all the way down to $190, and after that, you have to take $190 because otherwise, you got storage costs. You got uh, how long they've been sitting for, and every day that it sits, you lose money, right? So, but there's law of averages, right? 10% usually is the law of averages per month. So then you figure out per day it would be like less than 1%, obviously. So uh, it's the same thing with real estate stocks. You buy it, you want to hold it, you want to make sure you got that capital. Okay, so you put your stop limits in, especially when you first buy it, because that money is your money. You don't want to lose it. So you're willing to take some risk, but you don't want to take a lot of risk. So that's why you do the 10% pull or 5% pull. That gives you not very much flexibility, unless you're talking about a big, large cap company. 5% on $50 per share is substantial, right? It's $2.50 pull on your money. So like that, it doesn't seem like a lot, but when you can't afford to buy very many shares, like 500 shares or 100 shares, you shouldn't be invested in those animals, even though those animals will make you money, um, because they're higher, which means you usually have a fluctuation of 2 to 3% per day. 1%, you can make like 90 cents on the dollar. Put your stop limit in, you make a fair bit of money. But on 100 shares, you're making less than $100 a day. That's, to me, it's not feasible. Like, you go into the market, you want to make uh, what you would be making if you were to buy real estate. If you buy real estate, you will go, okay, if I rent out my house, I make $2,400 or $2,000 clear. $2,000 a month. If I rented the whole house and I revamped it to 2 living areas, I make $2,400. I have to pay taxes. I got to pay insurance on that property. This is what I'd be expecting, $1,800 to $1,900 a month on that one property. But you don't own the property. You put 20% down on that property, and you're trusting your tenants that they're not going to destroy all your things. So why real estate investing? What is the risk? Risk tolerance is your 5%. You're looking at stocks that pay dividends, and you're looking at stocks that pay monthly dividends. And you're looking at what do they do to gain those dividends. So like Suro Capital, they're into SPAC plays, not speculation plays, SPAC plays. So they do really well in the lockdowns because of Peloton, Zoom, and that they're invested in those, okay, big time, okay, Peloton, Zoom, uh, anything that's capital investing that deals with multimedia outlets that work from home. So they do very, very well with those. They got like 12 or 14 different avenues that they invest in, and that's how come they're able to give you such a great return on your capital of $8, and they've increased their dividend for the last 3 years. So that tells you a little bit about Suro and why I like them so much, because you can't find a company that trades at $12 even $12, $13 that pays you $2 per quarter per dividend. There's not one out there. Royal Bank, RBC, everybody will know them. They're trading at $138.32 currently as of yesterday. Right now, they are worth $11.04 per share. Let's look at Suro Capital. Suro Capital is worth $8.96 per share, and they're giving you an $8 return on your money. Wow. So they are giving you 48% yield. If I buy 10,000 shares, that's 20,000 $20,000 every 3 months. That works out to $6,000. If I took my capital, instead of buying property, I could have bought in Suro. I make $80,000 per $96,000 per year, right? Almost 100 grand. You're right in that ballpark of millionaire. Right? You're right in that ballpark. You want to do this for 3 years, and if Suro continues to increase their dividend, and Suro, by the way, is at $9 per share. They have 28 million shares outstanding. So they don't have a lot of shares outstanding. So it makes it hard to buy without driving it way up. Do they borrow money? Any business just starting out borrows money. They made $220 million last year. $220 million. They have 28 million shares outstanding. Royal Bank is 1.42 billion shares outstanding. They're currently sitting at $1.38 per share. The return on capital is $4.80 per dividend, and that's per year. Then you divide that, gives you 48 cents a month. If you were to divide Suro, $2, and divide that by 3, that will give you your monthly rate of return. So 2 divided by 3 comes out to what, right? 161? No, sorry, 61 cents. 61 cents per month. 48, 61, $138, $12. On my $125,000 investment, I could make 10,000. I could get 10,000 shares, a rate of return of $6,200 per month, $20,000 per quarter. I have to wait 9 months before I can start drawing the funds out. So I can get the rate of return every month. And I'm making $7,000, $7,200, $7,300 every month. Then I have to pay 10% taxes on that. I'm making 72. If I went and bought my house and rented it out, I'm making how much money a month? 2,400. I got to pay taxes on that. I got to look after the property. I got to do the collections on the property. I got to check, make sure that the roof isn't leaking, the taps aren't leaking, the electrical isn't damaged or destroyed. I got to make sure that they don't put big holes in the walls. I got to do an inspection every 45 days to 50 days because I want to make sure I'm looking after my property. I got to wear a lot of hats. I got to make sure I got my plumber hat, my electrician hat, my carpeting, know how to do mold treatment, know how to do pesticides, bed bugs. I got to know how to do finishing, drywalling. I got to know how to do fridge maintenance, washer, dryer, dishwasher. stove. Like I said, I got to wear a lot of hats. I got the furnace. Hey, uh, oil the furnace, look after it, have someone come in and do it once a year. You need to have it done at least once a year when you rent it out. There's a reason for that because you don't know if they have pets. And yes, everybody tells you don't get pets. If you're renting out your place, don't get pets. Easier said than done. If they wouldn't obtain a pet after they moved in, that's part of their family. So they can consider that that's part of my family, and that you go to your rental and tenant act, and you specifically said there's no pets allowed in the building, but it's part of their family, it can no longer be considered a pet at that point. They get away with a clause. That pet scratches up your carpet, pees or poops on your furniture or on your counter space or anything like that. You have to sanitize the whole thing. You have to wear a hazmat suit, come in and clean it. It could cost you $10,000 to $15,000 just on the first call, unless you do it yourself. And then you have to do it professionally. Because if it reeks, the next person comes in, they get it for free. Yeah, you get your place for free, which means you even lose more money. Okay, so why bother with real estate when you can just invest it, make even more money investing uh, into real estate investing, which is also the exact same thing, except the only thing is it's on a grander scale. Uh, like BTB, their value currently is over $1 billion in assets. So if you look at that and go, well, if they're over $1 billion, that means their stock is undervalued. Yes, it is. It should be sitting around 10, $12, but because their earnings per share is only 32 cents currently, it tells you that um, they're overvalued currently. That's your marker for overvalued currently. So what is the investment strategy? Is that they're not worth that on paper. They are right now because that's all they go by their last quarter. But you're the future, right? You're looking at the future of that stock or that company. They've already purchased the 1 million square foot area, giving them a whole wide range of more income coming in. So they're going to be 62 to 64 cents per share next year. That's double where they are now. That's $8 to $12 per share. And the dividend is going to go from, if they make 63, 64, you're looking at 60-cent return on your money. So that's double where it's at right now. So you're at 5 cents a share per month. That is huge, and that's what you want to see. Your return on capital is not only do you make more money, but they're also worth more money on paper. So that if you had to sell it, your stop limit gets hit, you sell it, you still make a mountain of money on it. You made triple your money just in selling the stock. And then you can buy it back when you see a pullback. Now, these stocks don't pull back very much. They might pull back 20, 30%. That's it, because everybody wants in. Everybody wants to make monthly incomes. Everybody. I don't care who you are, right? Everybody wants residual income. When they have that residual income, that's a solid base. And therefore, you can take some risk. You can buy something else, take a little bit of risk, buy another real estate company that's just starting out. Um, RISA investments that are trading at 5.5 cents to 6 cents. It says SR. Hold on 2 seconds. Sun Residential Real Estate Investment Trust. They're in the Sun regional states of the USA. So they're in Florida, Texas, and in California, in the lower mainland states. They call it the Sun Belt. Okay, but they're just starting out, and they're into, and a lot of people might like this because they're just starting out, and their properties are condominiums. or apartment buildings. Sorry, apartment buildings. They have 188 units currently. Uh, and where could they go? Well, they make 2 cents per share, so they should be anywhere between where they are now, 6 cents and 32 cents. So that's their market cap. They don't offer any dividends though. So again, this would be one of those animals that you can put your money in that you're willing to lose into that company. And this is Canadian. They also have a Nasdaq stock on the Nasdaq stock exchange too, but we'll look into that a little later. This was great. I don't get a lot of feedback from anybody, so I'm really appreciative if someone could give me some feedback on what was going on. The other thing that I can talk about is investing into like this one's like a microcap stock, right? Sun Residential is a microcap. Very high risk, very good reward if it can go up. You buy 10,000 shares of this, it's only going to cost you $600, right? And you can see where if you're just starting out investing, this would be probably where you'd want to start with something like this. But it's very risky. It can go to zero. They only have 188 units. So if anyone knows anything about real estate, it's very risky, especially when you talk about residential real estate. As you know, what I just talked about, just renting from an Airbnb standpoint, it's great, but it's got a lot of risk associated with it because you're depending on, you know, renters renting out your places. Even though you can do all the background search for yourselves, you have to basically hire a team for you, and that's where the project management comes in. They look after your collections and they look after the project manager, regional managers. They check out everything for you. In fact, they even do your inspections for you, and only 10-15%. That's what they charge most of them. Some will charge you 20%, depending on the size of the property and how much money it is. So it comes at a cost, and it doesn't guarantee anything. You can still get friends of mine rented out their places. They got screwed too, even with them. Person doesn't want to pay the rent, doesn't want to pay the rent, and then you got to take them to court, try and get your money out of them, and they can stay in there for 6 to 7 months. Some of these. Hi, how are you? Aries Homestead. Hi all. Good to see someone online. Drop your link. Yeah, there's no one on. It's just you and me for now. Thank you for stopping by. Really appreciate that. That's awesome. Talking about real estate investing, so hopefully you have some time to go through it um, and tell some friends if you like what you see. So I was talking about Sun Real Estate Rental Real Estate Investment Trust. This is for those because this is a microcap stock. Yes, it's real estate, and yes, it's formidable. Like it makes money, so it's in good standing. So anytime you have anything that's in good standing, it's awesome, and it really lightens the mood uh, when you're buying, right? So you don't feel stressed when you buy uh, stocks like this. But the thing is, it's microcap. You can go to zero. Um, it's like I said, it's my friends have lost their shirt in real estate. They made money because they sold their properties. They wanted to get out of it because they're pushing 50, 60 years old. So they wanted to get out of it. And, it's a young man's game, right? You want to buy it when you're young and see what you can do with your money. Um, Excellent. Okay. That's awesome. So what stocks would you like to, what would you like to look into? My suggestion is Suro. The suggested suggestion. But Suro is SSSS on the Nasdaq. So, and they pay the highest dividend that I've seen at the price that they currently are. And yes, they're into spec, so they loan or they invest into speculation, not speculation, spec plays. So like Zoom, Peloton, uh, all the list goes on. Multimedia on sites where people can communicate, like Citrix from home office. So it gives them a huge variety of different online options. Oh, you're into cryptocurrency. Making some money on crypto? When did you get in? Crypto's for those that don't know, crypto is um, is a different animal. Um, it's not financing. Everybody thinks it is, but it isn't. They still deal with U.S. currency, and the U.S. owns Bitcoin. Um, the founders of Bitcoin, there was four of them, and then there was a fifth, but the fifth one sold his stake in it, and then the others were forced out of it by the U.S. Congress. So the U.S. bought them, and then they sold their Bitcoin for them. So who's controlling Bitcoin? It's the U.S. Congress. Unfortunately, everybody says that they're a private entity, but and there's a bunch of new founders. I'm like, but those founders are based in U.S. and all the currency trading is in U.S. So it's a hedge against gold. That's exactly what crypto is. It's a hedge against gold because the U.S. doesn't want gold going through the roof because the U.S. dollar is in bad shape, as everyone knows. It's in really, really bad shape. And they knew this years ago because they were manipulating the gold price back then. And gold went through 18, 19, $2,100. It should be sitting at around $5,000 right now. Like in all aspects, it should be sitting at $5,000. But gold isn't. But you know what it is? Bitcoin, cryptocurrency. And good thing for Swampy. He's doing really well, I would think. Uh, it's got its ups and downs, I would think. Great. EV. EV cars is good. You make some money in that. That's absolutely true. Um, my stake, though, is real estate investing. That's one thing. The reason why real estate investing is they pay you monthly, regardless of where the market goes. And these are all trends. They could end tomorrow. You're like the electric car is not going to end tomorrow. Electric car is going to continue to grow. Um, and that's the truth of it. Uh, the electric car is here to stay. You're not at that point yet. You don't want to put your money away, have residual income. Everybody wants residual income. You've got monthly bills. If you were to invest in real estate, you're hoping to get that monthly residual income coming in. Everybody does, right? That's why I suggest Oxford and I suggest BTB. There's other ones. Uh, there's Stag. Maine. Maine is a good one too. And that's another investment that lends money to people, lends money to businesses that reinvest their money. So if you look up Suro Capital, it's SSSS on the NASDAQ Stock Exchange. And the market's about to open in 20 minutes. 22 minutes. Okay. Suro Capital pays $8 per year. Okay. Okay. How much did you put into crypto? The reason why I'm saying this is because Suro is trading at $12.33 currently. Right now, a few thousand. Okay. Um, so they're trading at $12.33. They're going to pay you $8 a year in dividends. They pay quarterly. They pay $2 a quarter. So it's 4 quarters in a year. Their next pay period Okay, the next pay period is, it doesn't say it on here. Their pay date is the 14th. They extended their dividend date to the 30th, okay, of December. The next pay period should be in March. Their calculated is it's going to be the 14th. Oh, recorded date. It was the 31st. The pay period is going to be January 14th. Okay, so Suro Capital Corporation, NASDAQ, $8 per share per dividend per year. That works out to $2 per quarter. So if you took $3,000 and you put it into this company, you wouldn't be able to buy very many shares. But you're getting you're getting $2 per share back. Well, that's good. You're into resale. Awesome. And it's good that you start your own company. That's awesome. It wouldn't be recommended for me, but only because of the monocron variant. Anytime you have COVID, it's going to put dampers on everything, unless you're dealing with logistics. Like if you're into resale or affiliated marketing, well, that's fair. Not bad. As long as you're able to make some money and do it from the safety of your home or do some logistics. Logistics is always good. Like Swamp B is doing some logistics. That's awesome. And if you're able to make some money, that's even better. Um, Crypto is not something I recommend to people because of the risk involved. Excellent. Good job. That's awesome. Like I said, as long as you're making money, you're laughing. Doesn't matter what you're doing, as long as you're making some money on the side. It's hard to do in this environment. And it's not easy. Um, Everybody's trying to do affiliated marketing or money mentors projects, and that's good. Um, I'm just telling people how to do it faster, safer, from the comfort of your own home too. Um, yeah. Well, if you're just getting into crypto, you're paying a lot of money for something that's speculation. A lot of people don't think it's speculation, but the truth of the matter is, it is. Uh, and risky. You remember the .com companies of yesteryears? Yeah, big shout out to Swampy and his wife, who are doing eBay sales. It's awesome. That is awesome. And thanks for sharing, by the way, that we try and get as much info to the masses as possible. And that's why I was suggesting Zero Capital Corporation to you. And please go back and review. I'm going to end my stream now. It's been over an hour. Um, and it's good to see people come on and make comments. I love it. I'd like to hear more from you. Um, Swampy is uh, sure make a comment and make sure you subscribe so we can keep these channels going. Like I said before, this is a free channel to everybody. We want to keep open-minded people. We want to make sure we get awesome. That is very good. $1,500. That's not an easy task. And if you're able to buy products and resell them, that is amazing. Sure, pass on your knowledge to somebody just trying to start out and see. eBay, as everybody knows, is yeah, big thumbs up. Make sure you hit the like and subscribe button at the bottom. Keep the channel going. Um, really, really great to see people making money. Absolutely, and it's a wonderful thing. All right, I'll let you guys go. Thanks for stopping by. Excellent, excellent. Uh, it's hard. Yeah, like I said, it's hard to get going. I've tried eBay too. Um, it's not an easy thing, and your hat goes off to you. Uh, it's a tough market because the expenses. eBay charges you a lot of money to sell and resell, and then you have to have to take on that role that Amazon, if you're looking at it too, right? Amazon doesn't charge you as much for shipping as eBay. eBay, you have to charge more for shipping because you have an overall cost. Uh, and that's just, and I'm getting sidetracked now on investments because that's what my niche is investments into real estate investing. So yeah, really appreciate that. Yes, 15% on eBay fees. It's high. It's insane what they charge, and then you have to take that money and then recharge that to your clients that are buying your product on top of that. So it's that's why I said like that's, and I'm getting away from major investing. So Swami, I really appreciate that insight into eBay, and then anyone trying to sell on eBay, my hat goes off to you. I applaud you for the great work that it takes to be devoted and to make money because it's a tough industry to try and grab a hold of and be a part of. So if you're making money, absolutely. If you're doing it on Facebook, social media, um, even on YouTube, and you're trying to sell a product, my hat goes off to you. And you're trying your affiliate marketing. We're trying it, still trying it, and well, when you're ready, just review the tapes, well, and go back and look at the real estate that I've offered, um, and then make an informed decision on what you want to do. Uh, and when you're ready to make that commitment, um, don't be afraid to reach out and talk to me. Send me a link to your channel, or and we can help each other out by getting to know what it is that you want, what kind of money you want returned. Right? Like I said, Sir will give you $8 per year per dividend. So if you're able to put $125,000, you make $20,000 a month. No, a quarter. $20,000 a quarter on 10,000 shares. Okay, because you pay $2 a dividend currently. The value of the Suro is undervalued in my standards. If you look at Royal Bank's at 138, 32. They pay $4.80 a dividend per year. Suro pays $8, and it's in U.S. currency. So they're paying you even more money. $20,000 is equivalent to $23,000 or $24,000 Canadian. Okay, that's over $7,000 a month. They pay you every month. So when you invest it and you do a drip, like I suggested, you get even more money because it goes back into the stock instead of you collecting it. It goes back into the stock. At the end of 9 months, you start pulling money out, depending on your needs. So you're looking at approximately $8,000 to $9,000 a month, US. And where should Suro be right now? Well, let's not talk about it, because Suro should be right in the ballpark of $180 to $190 per share. That is a huge rate of return, considering it's only trading at $12.33. That's a huge rate of return. That's why I'm thinking that, yeah, depends on where you are, sir, about buying a car wash. Car wash makes you money, no doubt, okay, because it's all based on time with the car washing. But be careful you're not oversaturating. So make sure you do some research into the area that you're putting it in, because the last thing you want to do is be putting another car wash when they already have 30 car washes in the same vicinity, or 10 in a small town, because there was 2 in a small town that I knew of, and everybody used the cheapest one, and then that one went under. So you got to be careful with that, just so you know. But why would you want to stick your money in that when you could buy it into investment strategies that make you money month over month, and there's no risk? The risk is that you're buying stock. That's what I'm saying. You're buying real estate, you're going to get your money back on your real estate investment. That's a guarantee. Like, when you first start off, make sure you put your stop limits in, so it protects your assets so that you don't take a hit the first time you buy. That's solid advice to anybody buying anything. Do not buy unless you have a exit strategy. You need that exit strategy before you buy. Yes, that's true. It does bring in money daily, but how much money do you have to put down on it? And what's your return? And what are your expenses? And what happens if the certain things don't work? Then what? Yes. Yes, it does. Yes, anything that puts money back in your pocket is a win. But when you have to start putting money out, uh, and if it's a lot of money, because how many of us know anything about car washes? Because detergents, and anybody can start a business, um, but you have to be business savvy. Okay, you have to wear your suit. You got to do your own due diligence. Even when it comes to a car wash, it seems like a simple thing to do. All you got to worry about is detergent. All you got to worry about is the pumps. All you got to worry about is the door opening and closing, um, the sprayers, that they don't get damaged badly. checking the maintenance on them daily. Okay, yes, that's true. Any cost to the business is a write-off. Absolutely. But keep in mind, you have to make it to get it. Okay. In other words, if your expenses are more than what you make, it doesn't matter. Okay, so yes, they're all write-offs, unless it's your write-offs are this big, okay, and you're making this much. How can you write that off? It has to be the other way. Your expenses are this much, and then your income is this much, and growing and growing and growing. You get the idea, right? Okay. Um, you're allowed 33% write-off on all taxes. That's what you're allowed. If it exceeds that, they ask you why are you in business. You can do that for 3 years. You can have big, huge write-offs for 3 years. The first 3 years you're in business, you absolutely can write off almost everything against what you make, because the country considers you not to making that you're not going to make any money for the first 3 years. But after 3 years, you do not make any money. They're going to start auditing you big time, because they're asking why are you even in business if you're not making any money. Just and that's sidetracking. I don't like it. That's why I wanted people to stop, think what they want to do with their money, uh, and get that residual income. And I understand you want to do a daily income. Daily income is the best way to go. Um, Absolutely agree with that. If you can get down your real estate investments down to a daily income, that would be awesome. But I was talking about people who want to buy a house, rent it out, so they got that $2,400 a month. What would they invest it to get that money? Well, you have to invest 20% of it down, put it into that house. Why wouldn't you just, instead of taking that risk associated with your house, just put that into an investment strategy, into real estate investment? That you're not invested in one property, you're invested in many properties, getting all that, and then they're sharing that profit with you as a dividend. I think that would be why. That's the targeted audience that I'm trying to pick on for that, so that they understand why they're investing and what's the risk tolerance that they have. Your risk tolerance is a lot higher than just buying a house. Your risk tolerance is pretty high. You have to do your research into property evaluations. You got to do your research into how many are in the area that you're putting it in, or where you want to put that, or if you're just buying it from somebody else. And then what's their rate of return, and then what's their maintenance costs, and then who's looking after it, and then are they doing their checks to see if the coins are accepting, not accepting, your pumps are all working, your brushes are all working, everything is kept clean, your nozzles, that little piece of nozzle that goes on the top, those are all maintained, and that someone's looking at that at least once or twice a day. So then you got to hire somebody. And my suggestion is, if you start hiring, you hire you and your wife first to run it. I've talked to many people about owning your own businesses. It's great. Hat goes off to you. Um, they usually don't make very much money the first 3, 4 years. Okay, they just make enough to get by. Um, getting uh, Being an employer is a huge undertaking, and you don't hire a lot of staff, right? You're going to hire maybe 3 or 4 people, and you want to keep them part time because like you said, that's a write off if you keep them part time. If you don't keep them part time, you have to offer them benefits to keep them. So that's why part time works better. And the amount of money that they'll take from you is like little or nothing, right? So Excellent. Excellent. Just do some homework before you do it. That's all I'm asking. It's like anything. Do your own due diligence. Do your homework before taking on any venture and exercise. Anyway, this is Will, your host on Major Investing, and I hope to see everybody in the next one. I try and do these once a week. I don't have a lot of time. I have an autistic child, so it's a little hard for me to do these uh, and get out and say hello to the public and be good and be fair and love everybody. God bless and take care of you. All right, this is Will signing off. Thank you. Have a great day. Swami, see you later. I hope everything goes well for you. Best wishes only. Thank you for sharing. You're awesome. Stay awesome, everyone.